So we completed our first chapter. In the first chapter, we see the price versus quantity chart. What is the difference between the range and pivot? How you have to mapping the chart with range and pivot? What is the continuation models and reversal models? And we see the applications of that models. How you have to mapping out the chart with supply and demand. What are the types of price correction? There are the three types of corrections: the rounded, the V-shaped return, and the last one is corrective return. And the last one is the modification of supply and demand. So today we start our second chapter, and that is market structure. You can see that we have two types of market structure. The first one is in the uptrend and second one is in the downtrend. Now, what is the difference between the utopian example and the real life example? Now, what is the meaning of utopian example? This utopian example is just a model of a bull trend. You can see this type of models in books. This is the simplified model of the bull trend, right? You can see that price is coming from the downward direction. It creates a higher low. Now from this point, price again go in the upward direction and it just break this higher high. And what is the meaning of this BOS? That is called the break of structure. So price every time break this previous higher high and make a new higher low. And now it going in the upward direction and it makes again a new higher high. And again it break the previous higher high. So this is called the break of structure. It is very important in price action. Price is moving in the upward direction and it makes a new higher high and new higher low. That is called the bull trend. Now this is the real life example. So in chart you can see that price is not coming like in utopian example. The price is written back in a corrective wave. After corrective wave again it creates a minus structure and again price going in the upward direction. So price is not directly coming like this. It comes back in a correction, then again it go in the upward direction, again it forms a correction. So this is the real life example. Price is going in the upward direction, it creates a higher low, again it going in the upward direction, it just break the previous higher high. So this is our break of structure. And again you can see that this is an impulsive move. Again price came back in a correction form, it makes a higher low, again price going in the upward direction, again there is an impulsive move and price just break off this previous high. So this is the real life example of the bull trend, and you can definitely see this type of example in the regular chart. So now we discuss about the downtrend bearish market structure. So again this is the utopian example. Price is coming from the upward direction, it creates a lower low, and again it going in the upward direction, it creates a lower high, and price again forming a new lower low. It just break the previous lower low. So this is called the break of structure. Now price creates a lower low, again it pull back and create a new lower high. Then again you can see that there is an impulse wave and you can see that it again break the structure and price just going into the downward direction and making a new lower high and lower lows. So that is the utopian example of the downtrend, or you can say that the bearish trend. Price creates a lower low, then it create a pullback and this is called a lower high. Then price, you can see that there is an injection of sellers and again it break the previous lower low. This is our break of structure. Price again create a lower low, then price return back in a corrective wave and again it creates a lower high. Then you can see that again price just break the previous structure and that is called the break of structure. And price is again moving in the downward direction, it creates a new lower low. Then again price just pull back and it creates a lower high and it again going in the downward direction. So you can see that price did not break the lower high in each and every situation. That's why this is called the bear trend, or you can say that a downward trend. So we can see that in the uptrend, or you can say in the bull trend, price is every time respect the demand zone. For example, this is the demand zone of 15 minutes. So price is every time respect the demand zone, right? Again it came back exactly at this point and again from the demand zone price is going in the upward direction. So you can see that price is going in the upward direction, it creates a higher high, then it's again drop into the demand zone, it creates higher low, then it break the previous structure, then again price creates a higher high, then price is returned back to this demand zone. Again from this demand zone, price is going in the upward direction, it creates a new higher high, it breaks the previous higher high. Now price again drop into the demand zone, and this momentum is continue running in the bull trend. So that's why it's called a bullish market, and price is respect the demand zone, right? So same we can apply for the real life example. You can see that price is respect the demand zone. Here you can see that there is a sharp move in the downward direction, true expansion in the upward direction. So this is called our pivot structure, right? And price respect this pivot structure and it moves in the upward direction. So same we can apply in the bearish market. And every time if you draw the supply zone, price respect this supply zone and price creates a new lower low. So price is coming from the upward direction, it creates a pullback, and from the supply area it again going in the downward direction, it creates a lower low, it breaks the previous lower low, again price going back in the supply area. Now again it creates a new supply zone, price going in the downward direction, it break the previous one, and again it going in the supply area. So every time supply is respected and price creates a downward momentum, and you can see that this is the utopian example of the bearish trend. Now we apply this supply model, then again price respected at this point, price just taps into the market and again moving in the downward direction. Then from this pivot created supply, you can see that this is the sharp move in the upward direction and true expansion in the downward direction. So you can see that price just respect this supply zone and it's again move in the downward direction. You have to understand the basics of the market structure, how the uptrend and downtrend is forms, how it creates higher high and higher low, how it creates lower low and lower high in the downward direction, how the supply zone is respected, when the demand zone is respected. And based on this theory, you can definitely merge this concept with supply demand. This is the core concept of the price action, and that is called the market structure. We see the application of this model in our next video.